So in this video, we're going to go ahead and touch on Tesla stock. We're going to go ahead and break down the price action that we saw in today's trading session, as well as touch on some of the things that we absolutely have to be aware about going forward into tomorrow's trading session, and as well as share some very positive news that we just got today that I think you guys would appreciate, especially if you're either trading Tesla or even just going long on Tesla for a long-term investment. It's going to be a lot in this video to unpack, and I'm going to do my best to go ahead and consolidate the information and make it as concise as I can. But with that said, I also want to encourage you guys to watch this video in its entirety. I know although times it could be a bit boring to go over a lot of the data, but trust me, I think you guys are going to really enjoy and see value in what is being said in today's video. So let's go ahead and talk about it. So for the beginning, or since the beginning of the week, I said that this is going to be a week that's influenced by macroeconomic data, heavily influenced by macroeconomic data. See, last week I was talking about the 10-year treasury yield, and I was saying, hey, there's this inverse relationship with the 10-year treasury and the equities markets right now, and when the 10-year treasury dips down, well, that's bullish for the stock market. When it dips upwards, well, that's bearish for the stock market. And we saw that we had some major moves last week based on, movement in the 10-year treasury. But I said, hey, this week, no, we're going to avert our focus on the 10-year treasury, and we're going to really pay attention to the macroeconomic data coming out. And so what did we have just a couple of days ago on the 29th? Well, to recap, we had the job opening numbers come out, and the market reacted very bullish to this. Now, what did we see in the job opening numbers? We saw that jobs openings actually contracted. Now you may ask, well, why is the market going upwards? It should not be that way, right? When the economy is showing that jobs are contracting, the market shouldn't move up. However, we're in a unique situation where bad labor news is actually good news for the market. Why is that? Well, we know that Fed Chairman Jerome Powell recently in the Jackson Hole Symposium stated that yes, inflation is trending downwards, it's going the way they want, but they still see the job market still too tight. And so they want to go ahead and engage and hope for the job market to loosen up a bit so that they don't have to continue hiking. And if they see that the job market's too tight, they may consider hiking, right? And so we saw that the job openings contracted. We saw a big move on the 29th. Then on the 30th, what did we have? Well, we had a lot of data, right? We had GDP revision numbers as well as PCE revision numbers. And then we had the ADP employment numbers. Now, I stated earlier before the market opened exclusively to the Push for Profit private group, and I shared a screenshot of this in yesterday's video, exactly what I said to them, right? But I told them before the market opened that I didn't expect too much of a big movement, and in fact I expected sideways movement, not only for Tesla but for the overall market, and that's exactly what we got. We got this choppy movement going down and up and pretty much closing relatively at the same point. And I said that it's not likely that the market's going to have another rocket ship of a day unless the news is very optimistic. Now, did we get good news from the ADP numbers? Yeah, it was good, but it wasn't great, right? Now, the ADP employment numbers are a precursor to the government numbers that we get tomorrow, which we're going to go ahead and touch on as we go forward into this video. Now we finally get to what we saw today. So what did we get today? Well, we got the personal consumer expenditure numbers coming out, and in reality, it wasn't that great, right? The numbers came in as expected. And so what does that mean? Well, the U.S. core PCE price index for July increased by 4.2% compared to last year, and that is exactly what was expected. Those were the numbers. Now, if it would have came in a bit softer, the markets would have reacted a bit more positive on that, right? But as soon as the data came out, the market really, in the pre-market, didn't move much upwards. It pretty much sold off. We bounced up a little bit in the beginning of today's trading session, and then we closed lower for the overall S&P 500, right? And so that's what we ended up seeing, and we'll go ahead and talk about this portion in today's video for Tesla. But in the beginning of the day, we saw a lot of choppiness, right? And so a lot of sideways action. So before we go ahead and talk about the good news, let's go ahead and talk about what we want to pay attention to for tomorrow. So let's go ahead and hop into the economic data calendar and let's talk about it. So we already went through all this finally. Now tomorrow is going to be the U.S. non-farm payroll numbers, U.S. unemployment rate, and U.S. hourly wages. This is going to have a huge influence on the markets tomorrow. Why is that? Well, again, the ADP numbers were just a precursor. We want to see that the government numbers that come out align with softening in the labor market, and if we see that, that's going to be very bullish for the overall market. So that's the economic data that we want to pay attention to. That's coming out at around 8:30, right? But I also want to show you guys something that we saw today. So if we go to Tesla stock today, we saw that at around 1 p.m. Eastern time, we saw Tesla stock pretty much start rallying upwards. Now, why did we see that? Well, we got extremely good news, and I want to go ahead and highlight this article that just explains what we got today. Well, we have news that the Biden administration will make $12 billion available in grants and loans for car and truck manufacturers and suppliers to retrofit factories to produce electric vehicles and other advanced models. Energy Secretary Jennifer Granholm, I may have butchered that, announced today, right? Then we also see here President Joe Biden will also offer $3.5 billion in funding to domestic vehicle battery manufacturers. Part of the total funding announced Thursday will come from the Inflation Reduction Act, and the rest will come from the Department of Energy's existing loan program, right? So once this news came out, we saw a huge move in Tesla stock, pretty much just starting to move upwards. Now, I want to go ahead and talk about this and kind of go a bit off tangent, because I often see online a lot of individuals put a lot of hate towards Elon Musk and Tesla and say, well, it's basically just ripping off of tax dollars and there's a lot of government funding going into Tesla. And yeah, in a sense, do I like when we have too much government intervention? No, I don't, right? But this is needed, right? There's a responsibility not only just as a nation but collectively as a planet to reduce the gigatons in transportation, and so that's why we're moving to the progress of shifting to EVs. And this is not just seeing in the North America. This is actually something that we're seeing globally, right? Even in the western parts of Europe, a lot of those countries are having the same missions as us, right? So it's something that we're seeing getting pushed around the world, and it's not because EVs are the cool thing to do now. No, it's not. It's not because of that, right? It's not, right? It's because we kind of have to, right? I mean, it was around 1978, I believe, when a scientist from Exxon, it's now ExxonMobil, right, because of the merger, and they made a presentation stating that, hey, there seems to be a correlation between fossil fuels and rising carbon levels and global warming. And unfortunately, at the time, it was ignored. However, now it's recognized globally that this can't be ignored, which is why there's a huge mission to go ahead and reduce the gigatons in transportation and be net zero emissions by 2030. It's not because the United States government wants to give out a bunch of money to EV companies just to enrich Elon Musk. No, I mean, there's actually a real concern here. So this good news provides optimism for Tesla. We have this good news that, okay, well, Tesla is going to most likely get some more funding along with achieving its mission. And we know that in the last earnings call for Elon Musk, one of the things he said is he believes that production numbers may stifle a bit simply because they're going to have to upgrade their factories, which is not necessarily a bad thing. When you hear a company saying, hey, we have to go ahead and install more gigapresses in our factories so we can produce more cars and align with our mission of delivering more vehicles, that's not a bad thing. But of course, Wall Street is in a sense myopic, where they only look at things quarter to quarter. And so of course, when we see profit margins compressed, as well as bad forward guidance, that's why we saw Tesla stock sell off for a while. Now we're seeing this move upwards, and this news today is definitely good news. And so this is why I say you can't just look at the charts and only the fundamentals. You have to combine everything, right? There's catalyst events that could shift the market. There's economic data that could severely shift the market, and you guys saw that back on the 29th. And there's just so many things that can move the market. And so what we want to pay attention to going forward in tomorrow is, okay, well, we had this good news for Tesla. Yeah, sold off a bit towards the end of the day, making it slightly flat. But as I told the Push and Profit private group this morning, that I didn't expect any movement today as well after we got the PCE numbers. Now, if we do see that tomorrow the labor market does begin to loosen, and of course we don't want to see anything. We're in a weird situation where if we see unemployment rise too much, where there's a huge spike, well, that's obviously bad too. But a little bit of a softening, we could see a push up for the markets. Now, also, we have to remember something. So if we take a look at our calendars, what is happening on Monday? Well, it's going to be a holiday. So the markets are going to be closed. Let's go ahead and actually, let me double check that. Because I always get my dates wrong. Nope. So yeah, Friday, tomorrow's Friday. Then we're going to have Saturday, Sunday, and Monday. Now, typically, and this is always typically what ends up happening. Now, of course, just because historic price action is something that we look at, it doesn't necessarily mean it's going to always repeat itself. But if we have good data for tomorrow, with the job numbers and we see just the overall market pushing upwards, it's most likely that we're going to have a really positive day for tomorrow, because oftentimes when we have these 3-day weekends, short sellers like to cover their positions. They like to sell, because who wants to go ahead and start shorting something? You have to understand that when you short, there's more risk than just going long, right? When you're going long, the most you could lose is everything and go to zero. When you're shorting, there's actually more than you could lose. You could actually go beyond zero and actually go negative. And so there's more risk in shorting. And so short sellers understand that, hey, when it's these 3-day holiday weekends, if there's some positive momentum, let me just close out this short position just to be safe, because what happens if news comes out not only on Saturday and Sunday that they have to worry about, but also on Monday? And so then they could, wake up on Tuesday with the markets opening and just dying. And then it works inversely, where if the markets are selling off, then most likely it's going to be a continuation into the end of the day. I don't expect tomorrow to be a choppy day. Of course, we're going to have to be reliant on the data, but we want to look forward to the data coming out at 8:30 with the unemployment numbers, and it's most likely, if it comes out great, it's going to be a positive day for tomorrow, and we could have a nice pop for Tesla. Now, let's go ahead and look at a couple of things. So Tesla is actually at an interesting level. We're at a level where there's a lot of volume relative to price, and that means that when there's a lot of volume relative to price, which is different from your traditional volume by time, that means that there's a lot of exchanging between buying and selling at these specific price levels. Now, I've stated that, hey, this is an area that we want to watch. I don't say technical analysis is something to predict. It's not used in that way. I think that's the worst way to use technical analysis. It's not to predict things, but it's to measure where we're at. And so what we want to measure is, well, okay, we're at this area where most likely there's a bit of a resistance. If we have good data coming out and we go above this resistance, well, now that pushes us at an area with less volume relative to price, and we have some more room to continue going forward if there's more buying pressure. Because remember, when there's low volume relative to price and there's buying pressure, it'll move up drastically. And then inversely, when there's very little volume relative to price and there's selling pressure, well, we sell off drastically, right? That's why as we were coming down right over here, we were at this area where little volume relative to price, we sold off quickly. And then if we look over here, when we started moving upwards, we had buying pressure at an area where there was little volume relative to price. So you guys get the picture. When there's buying and there's little volume relative to price, it moves up to order books. When there's selling and there's little volume relative to price, it moves down to order books. Now we're at an area where there's a lot of trading and exchanging going at this price level. And so we want to see, well, if there's good news, good data, and we break above it, well, we could see more positive coming for Tesla. Although I don't think all-time highs are coming just yet. I'm still a little bit bearish on Tesla and the overall markets. We're gonna have to still be patient, but also if Tesla's doesn't break this resistance and actually gets rejected, we have bad job data. Let's say unemployment actually gets lower and we see even more people in the workforce, right? Well, that could trigger some unconfident sentiment for the market as, okay, well, now the Feds are most likely gonna have to hike in September, right? And so that's something we want to pay attention to, the economic data and where we're currently at with Tesla. Now, I often say on this channel, and I always try to repeat it because it's important that I'm not only just trading Tesla in the short term, but I also invest in Tesla in the long term. So although I keep saying that, hey, I'm bearish on the short term, I don't think that we're still going to go up into all-time highs, it doesn't mean that I'm bearish on Tesla indefinitely, right? I think right now we're still in a difficult cycle, right? I wouldn't say that this is a bullish economy. In fact, when you hear that, yeah, people are employed and that's the only thing holding the markets up, right? That's the only thing holding the economy up. But when you hear that, auto loan rates are severely high, consumers are pretty much stressed out with all the payments that they have to make, everyone's in debt, we see credit card debt increasing. I mean, those are not good signs of a bullish economy. And so that's why I say, yeah, I think we're in a bull cycle, but in a cyclical I messed that up completely. We're in a bull cycle and a cyclical bear market. So something that we want to pay attention to. Although I do believe that long term, especially with the trend that we're seeing in EV, and also we're seeing that governments are pushing infrastructure to push out EVs, well, who's going to benefit from that? Tesla. And so that's why I'm benefit on Tesla in the long term. I think they're the ones who are positioned the best to take advantage of this and obviously be able to achieve their goal of delivering vehicles and making some numbers. And we're seeing that a lot of these legacy automakers are trying to get into the EV space as well, but they just don't have the infrastructure and they're not profitable yet, just like Tesla is right now. And so if you're a long-term investor, yeah, you want to go ahead. If we break above, okay, yeah, you could add in. If we start falling down, well, you wait for that sell-off. And you don't just buy just because it's falling down, right? I always say you don't want to just catch a falling knife, as they say on Wall Street. You want to go ahead and wait for that sell-off, then wait for that confirmation of that uptrend, and that's when you add in. Of course, everyone has their own approach. If you're just equally dollar cost averaging each month, that's completely fine. I do that with a lot of my index funds, but for individual stocks like Tesla, I like to do a lump sum. But at the end of the day, you have to do whatever you see value in. All I'm saying is that if you're bullish on Tesla, just be patient, right? Just go ahead and be patient. Of course, we're going to want to pay attention to the data tomorrow for some nice trading opportunities. And with that said, I want to end this video here, and I'll see you guys on the next video right over here. Take care, guys.